If you are an African in the diaspora, this message is for you. You've thought about investing back home, maybe not seriously, but the idea keeps returning. Every headline tells you Africa is risky. They talk about debt, instability, and currency fluctuation. Very few explain where opportunity is quietly forming. You see the chaos. The smart money sees the math. This video is not about fear. It is about preparation. One wrong assumption has likely kept you on the sidelines for years. You are waiting for Africa to look like Switzerland before you invest. But by the time it looks like Switzerland, the opportunity will be gone. Here is the reality of 2025. The global economy is shifting. The West is wrestling with stagnation and aging populations. The East is maturing, but Africa is doing something different. In this video, we are going to look at the data that Wall Street is quietly analyzing right now. We are going to move past the charity narratives and look at the hard numbers, demographics, technology, and the shift in resource control. I will show you the specific mistake most diaspora investors make when looking at these numbers. And finally, I will give you a framework to help you distinguish between bad risk and profitable friction. You believe the train hasn't arrived yet. I am here to tell you it is already leaving the station. I know why you hesitate. I know why you haven't made a move yet. It is the noise. For decades, the narrative you have been fed is one of peril. You hear Africa and you think of corruption, you think of infrastructure gaps, you think of your cousin who lost money on a project that went nowhere. You feel a tension. On one side, you have the black tax, the pressure to send remittances just to keep things afloat. On the other side, you have your own ambition. You want to build wealth, not just subsidize survival. But because you live in a developed economy, you have been conditioned to crave stability. You look for insurance, you look for guarantees. When you look at Africa, you don't see those guarantees, so you freeze. You tell yourself, I'll wait until the election is over. I'll wait until the currency stabilizes. I'll wait until the roads are fixed. Here is the truth you need to internalize. Investors do not get paid for stability. They get paid for solving problems. If you are waiting for the problems to disappear, you are waiting for the profits to disappear too. The hesitation you feel is not because there is no opportunity. It is because you are looking at the continent through the wrong lens.
Let's look at the reality of 2025 without the emotion. Let's look at the pillars of growth that are holding up this new narrative. First, the demographic tsunami. While the West is aging, Africa is young. We are moving toward a population of 2.5 billion by 2050. But this isn't just about more people. It is about a workforce. By 2040, Africa will have the largest workforce on the planet, larger than China and India combined. This creates a youthquake, a massive engine of consumption and production. These aren't just mouths to feed, they are digital-first consumers. Second, the leapfrog effect. We used to think a lack of infrastructure was a death sentence, but now we see it allows for speed. Africa didn't have to tear down old landline networks to build mobile banking, we just built the banking. We are seeing this now in energy. Decentralized solar is bypassing the broken national grids. We are seeing it in logistics. The infrastructure gap is not a hole, it is a blank canvas for high-growth businesses. Third, the AfCFTA, the African Continental Free Trade Area. For a century, it was easier for Nigeria to trade with London than with Ghana. That wall is breaking. We are creating a single market of 1.5 billion people. This creates scale. A factory in Kenya can now realistically target a customer in Egypt. Fourth, resource nationalism. This is critical. Look at what Zimbabwe did with lithium, or what West African nations are doing with gold and cocoa. The days of dig it up and ship it out are ending. Governments are demanding local processing. They want factories, not just quarries. This means the value chain is moving to the continent. This is the macro picture. The wind is at our back. But knowing the wind direction isn't enough to sail the ship. Let me tell you a story about a man we'll call David. David lives in Atlanta. He's an engineer, smart, analytical, saved his money. In 2021, David saw the agricultural boom coming. He decided to start a logistics company in his home country to move food from farms to the city. He bought 3 trucks, high quality, imported from Europe. He hired a manager he met on LinkedIn. He set up a dashboard so he could track everything from his laptop in Atlanta. He thought he was investing. What he was actually doing was imposing a Western model on an African reality. 6 months in, the problem started. The trucks were breaking down because they weren't built for the rural roads. The manager was inflating fuel costs. Customs delays ate his margins. David panicked. He looked at the chaos and said, "This is impossible. Africa is uninvestable." He sold the trucks at a loss and quit. But here's the twist. The man who bought David's trucks was a local operator named Samuel. Samuel didn't run the business from a laptop. He didn't use European maintenance schedules. He used local mechanics. He didn't trust, he verified. He focused on short, high-margin routes rather than long cross-country hauls. Today, in 2025, Samuel runs a fleet of 20 trucks. He is servicing the very supermarket chains that are booming due to the middle class. David failed because he wanted the environment to adapt to him. Samuel succeeded because he adapted to the environment. David saw chaos, Samuel saw friction, and he charged a premium for navigating it. So how do you avoid becoming David? You need a framework, a way to filter the noise. I call this the frontier filter. Before you put a single dollar or hour into a venture, ask 3 questions. Question 1. Is this a vitamin or a painkiller? In the West, you can make money selling vitamins. Nice to have luxuries. In Africa, growth is in painkillers. Does your idea solve a boring, painful problem? Food preservation, reliable energy, moving goods, housing. If it's not solving a headache, it's too early. Question 2. Does it rely on the government being efficient? If your success depends on a government agency working perfectly, do not do it. The best opportunities in 2025 are policy-proof. They work despite the inefficiency, often by providing the service the government cannot. Question 3. Who is the bridge? You cannot manage African complexity from a Zoom call in London. You need a bridge. This is a partner who understands the local context, the culture, the informal rules, the handshake deals. Your capital is useless without their context. Structure your thinking before you structure your bank account.
I want to pause here for a second. Does David's story sound familiar to you? Have you tried to start something only to get burned by the logistics or the people part of the equation? Or maybe you are sitting on cash right now, looking at the data, but terrified of making that first move. I want to hear from you. In the comments, tell me, what is the one specific fear holding you back? Is it trust? Is it the currency? Let's have an honest conversation down there. I read the comments because that is where the real insight is. Now, let's get practical. Based on the current 2025 landscape, here is your guide. What not to do. Do not practice guilt investing. Do not fund a business just because a family member needs a job. That is charity, not business. Confusing the two destroys both relationships and capital. Do not bet on raw materials. Don't just buy land hoping to find gold or sell timber. The governments are clamping down on raw exports. The money is in processing, not just owning. Do not scale emotionally. When you see a little success, don't pour your life savings in immediately. Africa is volatile. Cash flow is king. What to do? Think conservative phasing. Test your idea with small amounts. If you want to build real estate, start with 1 unit, not a complex. Prove the model works in the messy reality before you scale. Look for the enablers. Don't just look at the consumer. Look at the businesses serving the consumer. Who is providing the payment software? Who is doing the cold storage for the farmers? Investing in B2B, business to business, often carries less risk than B2C, business to consumer. Leverage the Diaspora bond. Look for formal investment vehicles, Diaspora bonds, vetted equity funds. You don't always have to be the entrepreneur. Sometimes the smartest move is to be the silent backer of someone who is already winning. We've talked about data, we've talked about strategy, but I promised you one key insight that changes everything. Here it is. The African Union calls the diaspora the sixth region. In 2024 alone, you sent back over $95 billion in remittances. That's more than foreign aid, it's more than foreign direct investment. But here is the shift you need to make. Stop viewing your role as a savior and start viewing it as a strategic partner. The West is playing defense. They are trying to protect wealth in a shrinking demographic market. Africa is playing offense. We are building wealth in a growing demographic market. The risk you are so afraid of, that is simply the price of entry for high growth. There is no such thing as a high growth, low risk, perfect infrastructure market. If that existed, the biggest hedge funds in the world would have bought it all already. The chaos is the moat. The difficulty of operating in Africa is exactly what protects your margins once you figure it out. You have a superpower the likes of BlackRock and Vanguard do not have. You have cultural fluency, you have roots, you have a reason to care that goes beyond the quarterly report. You are not looking for safety, you are looking for asymmetry, where the upside is far greater than the downside. That's Africa in 2025. The map of the global economy is being redrawn. For 500 years, value flowed out. Now, value is being created within. The journey will be bumpy. There will be currency slides, there will be political noise, but the demographic and technological math is inevitable. You have a choice. You can watch the last real growth market in the world rise from a distance, or you can decide that you are going to be part of the engine that drives it. It's time to stop waiting for perfect conditions. It's time to prepare. If you want to understand how to vet the partners we talked about today, I have a video coming up on the Trust Protocol, how to hire in Africa without getting burned. Make sure you are subscribed so you don't miss it. Build wisely.